Okay, guys, let's take a quick look at the results of putting effort into deducting things on our taxes. So, once again, we have this assumption box here that we've been using the whole time 3.5 gigs a week, $200 a gig. We're saying that we average about $40 a gig in tips. All these things are just kind of guesses here for us. So, the very first option we did was to be taxed as a sole proprietor, regardless of whether we were an LLC, taxed as a sole proprietor, or a sole proprietor tax as a sole proprietor, as you would expect. We put no effort into it. Then we came to option two, which was the same tax choice, the sole proprietorship taxation, but this time we put some effort into making some deductions for the year. So I'll scroll past all our cash deductions we made, non-cash deductions like depreciation expense and home office. We came down here and had some personal deductions because we own a business. This is the table that I use to calculate some of the taxes. And here we are, option one versus option two. Federal taxes were more than twice as much, $3,400 for option one, $1,100 for option two. That's huge. State tax was about 3 times higher, $1,200 for not putting effort in, $464 once we put effort into deducting expenses. Social Security and Medicare, $6,600 under option one, $4,500 under option two, so $2,000 less. If I sum all that up, you can see here that the results were nearly half as many taxes were paid by putting some effort into our deductions. And the most important thing you guys are most concerned about is right here is how much of the money that we made gets to come to us to spend on ourselves or to buy more assets for our business, for expansion, or anything. Option one, we paid all those taxes and, of course, had to pay all the bills, and we ended up with $23,000. Option two gave us just over $30,000. So these results include all the assets we bought for the business, the profit of the business, and the mileage check that we were able to write to ourselves. If you remember earlier, we wrote off mileage, but that was a cash deduction. So we were able to cut ourselves a check personally from the business for $1,490. And therefore, we ended up with these numbers at the bottom. One thing I want to point out about adjusted gross income is this. When you see it down here at $24,000 for option two, this also makes you eligible for the Affordable Care Act, which means you can get some really cheap, if not free, health insurance. Now, this is the case at the time of me making this video, and of course, those laws and rules change from time to time, so you'll have to check in on that. But an adjusted gross income of $24,000 would very likely get you some health insurance. If you happen to have student loans and you're using one of the income-based repayment programs, you would have extremely low student loan payments too. Okay, in the next video, I'm going to show you what option three is, and that is being taxed as an S corporation. S corporation taxation really only adds one additional detail to your taxes, but it's also the one that will save you the most money.